Now, without further delay, let's begin today's event, sponsored by CoStar and hosted by Accounting Today. I'd like to introduce your moderator, and that is Danielle Lee. Danielle, the floor is yours.
Thank you so much, and thank you all again for joining us for today's webinar. Before we kick off today's session, some CPE information for you. And my name is Danielle Lee. I'm the Managing Editor at Accounting Today. I'll be your moderator today. Horizon is pleased to be able to offer CPE for this web session. It is imperative that you adhere to the following instructions to obtain CPE credit. To receive credit, you must be in attendance for a minimum of 50 minutes. No credit will be awarded from watching the replay. Accounting Today is not responsible for late arrivals or connections issues. There will be required polling questions asked periodically throughout the session, all of which you must answer. Please remember to click Submit after choosing your answer. If you have completed the above, please allow up to 3 business days from date of today's session to receive an email from civilcert.net. This email will contain instructions on how you can download and print your CPE certificate. To ensure email receipt, please add civilcert.net to your safe sender list. Please note, CPE certificates will only be sent to those attendees who have registered and stayed for at least 50 minutes and answered all required polling questions. If you're watching in a small group, the person logged into the program is a small group facilitator. He or she must respond to the polling on behalf of the group and must monitor, document, and verify the active participation of the individuals in the small group. Please have the small group facilitator email support@virtualvenues.com within 3 business days a list of names, emails, and company of those who have registered in the small group for them to receive credit. And now I'm very pleased to present today's speakers. We have Matt Waters. He's the Director of Lease Accounting with CoStar. He's a former lease accounting manager with Home Depot and American Tower with 15+ years of lease accounting experience. We also have Bryan Sinclair, Vice President, Technical Accounting, RGP. Bryan is an accomplished accounting and finance professional and began his accounting career with the Big Four. So I'm very pleased to announce today's presenters and to turn it over to you, Matt.
All right. Thank you, Danielle. And this is Matt Waters. And as Danielle mentioned, I am a CPA. I've been working in lease accounting for about 17 years now. You know, I finally put 15+ years, so I didn't have to update it all the time. But I worked at American Tower, which is the largest real estate investment trust in the U.S. and we had hundreds of thousands of leases there, managed lease accounting there, and then also worked at Home Depot, company that really needs no introduction. And you can imagine how many leases Home Depot has, be it stores and distribution centers and forklifts and trucks, and you know, really the list goes on and on. And after Home Depot, I started working with CoStar. CoStar, among many products, we have a lease accounting, lease administration software. And so now for about the past 7 years, I've had the privilege of helping hundreds of our customers go live with new lease accounting standards, you know, ASC 842 and IFRS 16. And you know, some of them have been in the midst of transactions like we're talking about today. You know, IPO on the horizon, or you know, considering a transition via SPAC, and really, you know, a lot of other transactions that have similar characteristics. You know, examples jump to mind like a acquisition, a disposition, you know, being combined with a foreign entity, or bringing a foreign entity on board. You know, really all of these types of transactions, you know, we're focusing on IPO and SPAC today, but all of these types of transactions have similar characteristics as they relate to lease accounting. And we're going to dive more into that in a few moments. But first, let me say thank you to Bryan for joining me today. And Bryan, I'd love for you to take a minute and introduce yourself.
Excellent. Thank you very much, Matt. And it's good to work with you again. So yes, my name's Bryan Sinclair. I'm currently Vice President and the Technical Accounting Practice Leader at RGP. RGP is a global advisory accounting consulting firm, and you know, we've done hundreds of engagements helping companies adopt 842 and IFRS 16. And almost predominantly most of them have implemented some sort of solution. And we worked with CoStar for many years as, again, probably the premier solution around lease accounting, and very happy to work with them. More of my background, nearly 9 years in Big Four, other various leadership positions in accounting and finance with public companies, as well as assisting companies going public throughout those years. For the last 7 years, I've been with RGP, and as part of the practice, we've not only focused on lease accounting, we do have a large practice that supports companies going public, either through the traditional IPO route or via the SPAC. And this is a very important area because as we talked about, or as Matt introduced, automation is really, I think, a key to a lot of the compliance concerns, and being able to bring forth a controlled environment. So again, looking forward to this presentation, and thanks again. Back to you, Matt.
All right. Yeah, thank you so much for joining us today, Bryan, and welcome again to everybody online. So here's the kind of a summary of what we're talking about today. We are going to dive into the details a little bit and talk about 10 automation best practices, but first, just to set the stage, just the nature of where we are with deadlines. ASC 842 was live several years ago for public companies, and then through various deadline extensions, one of them kind of being related to COVID, but non-public companies have had really about a 3-year gap there where public companies were in compliance with ASC 842. Now non-public companies are kind of on the clock, and really the almost, I'd call it the drop dead kind of deadline is when the next annual reporting period coming up at the end of this year. So however you look at that, non-public companies will need to be in compliance with lease accounting rules under ASC 842 very soon. Now, the main point related to an IPO or a SPAC transaction on the horizon, and as it relates to lease accounting, is that will accelerate the deadline for ASC 842 if that happens between now and kind of the normal deadline for a non-public company. So that's a big consideration. And another consideration for a company that's going public is really all of the system controls and automation that you're most likely looking to put into place. A lot of companies that are in this situation are implementing a new ERP system. They're looking at Sarbanes-Oxley compliance, making sure controls are in place. There's just a long list of items to check off, and not the least of which is lease accounting, but it is just one thing, right, on a very long list. And so what we've noticed as companies go through this type of transition, they need to automate as much as possible, and then of course maintain control, even increase controls, as they're going to be under heavier scrutiny going forward, and of course all the time maintaining keeping costs in check and setting themselves up for success going forward. So really when you break it all down, the lessons that we've learned from helping public companies go live with ASC 842 are really the same lessons that can be applied to companies considering an IPO or a SPAC, and so we're going to dive into those details today, but just wanted to set the stage there, and then I know, Bryan, you have some thoughts on this introduction as well.
Yes, thanks, Matt. Yeah, and you're absolutely right. I think probably the biggest concern is not only being compliant, but you have to start thinking about being SOX compliant as well once you become a public company, and having a true subledger type structure accounting system that supports your lease accounting is paramount. And the other aspect to it, of course, is the amount of financial reporting and the time to get that done. Quarterly reports, Form 10Qs, are due fairly soon after each quarter end, and having an automated solution that can produce the information, the accounting information on an accurate, complete, and reliable basis is really an important part to achieving a quick and efficient close and being able to report accurately. And so that's so it was definitely an aspect of becoming a public company that I think for a lot of companies that are going through the process don't always think about as they begin their journey of becoming public.
Absolutely. And Danielle, that brings up our first polling question.
Indeed, it does. It is time for your first polling question. The question is, which of the following best describes your company and status for ASC 842 or IFRS 16 lease accounting transition? Your choices are non-public company working on transition, non-public company already successfully transitioned, public company already successfully transitioned, public company already transitioned but looking to make improvements, or other, not applicable. And you have 5 choices here. Click the radio button to the left of your choice and click submit to make sure your response goes through. Once again, we're gauging your status for ASC 842 or IFRS 16 lease accounting transition. And those choices again are non-public company working on transition, non-public company already successfully transitioned, public company already successfully transitioned, public company already transitioned but looking to make improvements, or other, not applicable. I'll give everyone a final few moments to get those responses locked in. Just remember to click submit after you choose the button to the left of your choice here. Give everyone a final 5, 4, 3, 2, 1. And it looks like roughly half the other, not applicable, though non-public company working on transition, that's about a quarter, and then the rest kind of is evenly distributed amongst the rest. I'll turn it back over to you, Matt.
All right, great, and thanks to everybody for answering that. And I think the content today will be useful to most anybody who's interested in the topic of lease accounting and IPO SPAC. What we've really briefly what we've learned over time and seen is that some companies, some public companies, went live with a solution that had to be propped up with Excel, right? So just very very briefly setting the stage here. I actually had a call the other day with a company that was live with ASC 842 and exclusively using Excel. And I got to take a look at the spreadsheets that they were using, extraordinarily complex, right? Just for one lease, because of all we're not going to dive into all the nuances of the standard today, but just, the new requirements involving net present value calculations and amortizing every month and different methods for finance leases versus operating leases, can quickly get out of hand in Excel. What we've also seen is that with a generic lease accounting solution, the calculations, especially the remeasurement calculations that are required, and other nuances of the standard, those can quickly get out of hand to the point that a lot of times we have companies switching over to CoStar for lease accounting. They already have a lease accounting solution that they selected just a few years ago, but they've become increasingly frustrated by how many Excel spreadsheets they have to maintain outside of their new solution, that they decide to just scrap that whole project and start over with CoStar. So a lot of what you'll see today are lessons learned from those discussions that we have with those new customers. We ask them how many hours they're spending on different types of tasks, and I won't just read this whole list. A lot of these items we're going to talk about in greater detail today, but uploading manual journal entries and performing manual remeasurement calculations, for example, and producing manual reports for audit support. All of these items really add up to a lot of time spent when they can't be done in a lease accounting solution. And so, to tie it back to the IPO SPAC discussion, one thing I've observed in every single one of these companies that's going through that preparation and then ultimately that transaction, you're very busy, right? you have a lot of balls up in the air, and so the last thing you have time to do is support your software solutions that you're paying for with manual Excel spreadsheets. So we want to take that off the table and give you back this time because in that IPO SPAC world you're going to need it. Brian, what have you observed as far as this type of activity?
It's very much the same issue, Matt. It's you're right. It is a rush to go through the process, and especially the SPAC process, which is a very accelerated route to becoming a public company. There's so many different work streams, and it's preparing auditable financial statements under a PCAOB audit standard. It's preparing the various SEC documents required. It's preparing all the other governance matters that need to be put in place, and the considerations around SOX. And so, the adoption of new standards or even having systems in place that support the numbers is so key. And we have seen the use of spreadsheets going into that date of going effective with your IPO or your SPAC. And then there is certainly obviously a relief that occurs after that effectiveness. But we've also seen cases where clients have continued to use spreadsheets, and the risks that it creates and delays that occur with getting through the close for that first quarter end. And in many cases, that first quarter end can come very quickly after an IPO, and especially quickly after a SPAC. And so there's usually, I've always say, time is of the essence, and being able to put more time back into that reporting process is just a huge advantage. And having an automated solution such as CoStar can go a long way to contributing toward that success.
Yeah, definitely. I promised we'd dive into some details, so we're gonna get into that now. First point here is seamless real estate lease administration to lease accounting workflow, and what we mean by that is, really the same data is needed by both teams. So lease administration and lease accounting. Lease administration team typically is responsible for abstracting leases, and that of course makes sure that the lessors get paid on time, keep you out of default, that kind of thing. But really the financial data that gets entered and the dates that get entered, that's the same information you need for lease accounting. And so if you don't have a system with seamless integration between the two, you end up entering data twice. Of course, that's incredibly inefficient because you're doing double work, and you also lose control, right? Every time you have to type something in again, you open up the risk for user error. Just even something as simple as a fat finger mistake. When you're entering, doing double work, that can cause a misstatement on the financial statements. You can have something as extreme as a finance lease that should have been a operating lease or something like that. That can move the needle for large leases or for a big group of leases. That can move the needle pretty significantly on EBITDA. For this reason, and really the two main areas here are the time savings of eliminating double work, and then the risk factor that's just inherent in double work. For those reasons, we recommend a solution like CoStar, where these are they're not just integrated, they're seamlessly connected. It's all one system. And so when lease administration enters data, it's instantly available for lease accounting. And then the control environment is really tight in that scenario. Bryan?
Yeah, I just want to add, I think for the seamless aspect to quickly achieving the right accounting, there's also the aspect for every public company is the need to really understand, be able to produce reliable forecasts, earnings estimates. And so having solutions like CoStar that can produce the information really at your fingertips to produce future expense, that's a huge advantage in that forecast process. And your finance leads will love that, and your investor relations will certainly appreciate having timely information available to them as they're meeting with analysts and investors.
Yeah, absolutely. I mean, it's a lot of times, when you get focused on one aspect of, especially in a compliance oriented change like lease accounting, it's easy to think about it as an accounting project, but that's a great point. Thinking about how it affects other teams like the finance team, the FP&A team, or the strategic business development team, or the tax team even will come up later in the presentation, but that's a great point to think about how that affects other teams. The second one we'll talk about is automated reporting and system-generated audit details, and so really the main or the most publicized report that is needed under ASC 42 is commonly called the disclosure report. This is what you're going to need for your lease footnote and on the 10K, but really it's needed for any annual report. If you're going to comply with U.S. GAAP, you need to have these details in your annual financial results that you present. Perhaps if you're not a public company yet, you may need to present GAAP financial statements to a bank or to some type of regulatory agency, not just the investors or the SEC. So really these reports and then the auditing associated with those reports are vitally important. Now, I've worked at some very large public companies in lease accounting, as I mentioned, and we would spend days, sometimes weeks, without automation, cobbling together information in Excel, using VLOOKUPs and pivot tables, and ultimately trying to produce something that the auditors could then go and make selections from and dive into the details. Again, it could take weeks for a big company to do that manually in Excel. With CoStar, we've automated the main reports that you need, and kind of candid conversations over the years, I've even had auditors say thank you, thank you to CoStar for automating these reports. And the main ones that they talk about are the disclosure report and the roll forward report. Roll forward just kind of marches them through what the starting balance was of the key accounts, and then what happened during the year, and then the ending balance. And all of this is available automatically at the lease level and at a summary level. So it really takes all the busy work out of getting ready for an audit. It also satisfies the auditors immediately, because if they get all the detail right away, there's almost no need to make additional selections because they get to see everything, right? So it's very transparent, and as I mentioned, it's instant. It actually is so quick that a lot of companies, instead of running these reports on an annual basis, they now use CoStar and run them every month because it assists in their analytics, in their balance sheet reconciliation process, and just kind of helps them keep an eye on their key metrics all year long. And so for those reasons and many more, really, this comes in as a top reason for improving automation. Bryan?
Yeah, and for many of you folks out there who have gone through that transition from private company to public company, realize that the breadth and the depth of the audit is, the scope of that audit is much deeper now, and the ability to bring about a more efficient audit by having reliable solutions, accurate and complete solutions and information can reduce those audit costs and reduce the amount of time spent on the audit. And so there's definitely a payback around that. And so there's advantages to having solutions like CoStar that can produce these reports and automated and really allow the auditors to audit through the system rather than trying to stumble through and cobble through spreadsheets and such. So definitely an advantage to have that solution in place like CoStar to help you through the audit.
Absolutely. And kind of going hand in hand with that is having system-controlled compliance checks and validation of data. This one, I'm not going to spend a ton of time talking through this one on my side. I mean, really, what this does is it helps accountants sleep better at night. From the CFO and controller, all the way through to staff accountant. If you can have something in place that is automatically checking behind you and giving you assurance that your work is error-free, you want that. And the way I like to think of it is, we've all, working in accounting, we've all seen the value of having somebody review your work. Be it a supervisor, maybe when I can think when I was just starting out, a supervisor would say, hey, don't check this, it doesn't look quite right. And I'm thinking, how did you know? But if you have a solution in place that can be double checking for you, in addition to those reviews from your experienced associates, that's just invaluable. And so the controls that CoStar has in place and the checks behind the scenes, they number up into the hundreds. So I like to think of it as somebody when you review a reconciliation, for example, or you review a journal entry, you might be checking for for a handful or maybe a dozen different things that to check from your experience and your knowledge of the company. And then with CoStar's automated system checks, it's checking every single transaction with hundreds of different check figures to just, again, help you to sleep better at night. So something that can add peace of mind and of course save time too, because every error that gets caught automatically is an error that potentially an auditor is not going to have to find later. And then, we know how that goes, that you spend valuable time and resources responding to errors if the auditor finds them. Bryan?
Yeah, and every public company at a minimum has requirements to comply with SOX 404A, which is the company's assertion around its internal controls over financial reporting. But there's also, of course, the 404B ultimately, which every public company will need to comply if they meet certain SEC requirements. Needless to say, having automated controls in place to help you produce complete and accurate financial statements relieves a lot of that concern and risk around your lease accounting, and so last thing you want to have is when you go public, are significant deficiencies or material weaknesses, especially material weaknesses in your internal control structure. So having these automated validation capabilities and controls and compliance checks is a significant control point.
Yeah, definitely. Thank you, Brian. So the next one is automated bulk lease remeasurements. And to really introduce this topic, we need to talk about a remeasurement briefly. A remeasurement under ASC 842 guidance basically is required whenever there's a change in the lease. And lease changes can take many forms. They're renewals, they're terminations. You could kind of group impairments into the same category. And really, what happens when there's any of these types of remeasurement events, you have to recalculate the lease liability, you have to recalculate the right of use asset. There are different rules depending on which type of remeasurement that can apply differently to the asset and the liability calculations. And so really it takes a robust system to capture all this automatically. And CoStar has that automation in place. CoStar has also received feedback from some of our larger clients, and they said, hey, we go through transactions where we need to remeasure hundreds or even thousands of leases at the same time. And so I won't get into all the scenarios there, but you can imagine, a fleet type scenario, a fleet of vehicles or trucks or something like that, or a broader business transaction where a company is being spun off or acquired or something like that. All of these scenarios involve potentially remeasuring and recalculating hundreds or thousands of leases at once. And so CoStar has set it up now so you can set your business rules. So you can set the rules around, for example, updating the discount rate. You can set the rules around what date, to use to make the remeasurement effective. And then you basically click go, and all of those hundreds or thousands of leases are remeasured at once. So it is really quite advanced functionality. It took quite a lot of development effort at CoStar, along with many meetings with our customer advisory council and getting feedback on what they need. But now, this is live. We have customers using it now, really to great advantage. They're saving hundreds of hours, versus manually calculating these in Excel. Brian?
Yes, with everyone going through the recent pandemic, and we saw a lot of amendments and restructuring of lease agreements. And we've worked with a number of clients, and it was around this very issue of bulk remeasurements. And the solutions, like the CoStar solution, has done a phenomenal job in performing those remeasurements timely, accurately. And this kind of, again, gets back to the question about spreadsheets. From a chance of potential or risk of error, it's all but reduced significantly through utilizing CoStar and being able to produce those remeasurements on a very timely basis and still meet the close parameters and reporting requirements.
Yeah, definitely. And, I kind of think in terms of the IPO scenario, if you're in that, chances are that's just the beginning. This is a milestone for your company. But if you're in that scenario, you are probably looking at acquisitions in the future, and this type of functionality where you can onboard or remeasure hundreds or thousands of leases at once will probably pay off big time, as you move forward. Another very similar feature that we want to talk about, we actually have heard customers switching over to CoStar from other kind of more basic accounting software. They switch over to CoStar. The number one reason is this retrospective true-up functionality that we're talking about next. And what this means, it's really a quite familiar scenario to most accountants. You go through month-end close, everything is in, you close the books, and then a week later you get some type of information that you should have had during month-end close, like, hey, we renewed this lease, or we terminated this lease, or something like that. And so CoStar very early on released functionality that would retrospectively true up the accounting schedule, but book the effect of that in the next open period. So in other words, the period that's already been closed is closed in CoStar. You've posted your journal entries for that month. They're marked as such in CoStar, so that period is closed. And then if you change something with a retroactive date, CoStar will automatically recognize that this affects the prior period, and it will calculate the true-up entry. It will compare what should have been booked to what was actually booked in the closed period, and then give you the calculation and even the debits and credits. The journal entry is automatically imported into your ERP system for this. So it fully automates the true-up process, and again, it's an area where accountants are saving really tons of time every month. As this is just a fact. You're never going to have perfect information, so this helps to streamline that process. Bryan?
Yes, Matt. I like that last bullet point. Maintaining an audit trail, both here for the retrospective true-ups as well as the remeasurements, and so CoStar is very effective in maintaining that audit trail, so you can clearly see the transaction flow prior to and then subsequent to that transaction. And again, just from an audit perspective, or during the quarterly reviews that the auditors will perform as part of their required procedures on the quarter, it's just a definite advantage over non-automated solutions.
Definitely. And Danielle, over to you for our next polling question.
Thank you. Your next polling question is your company in the middle of or considering an IPO SPAC transition? Your choices here are yes, no, maybe in the future, other, don't know, not applicable. So once again, just taking a pulse of our audience here today, we're wondering if your company is in the middle of or considering an IPO SPAC transaction. Yes, no, maybe in the future, other, don't know, not applicable. There's 4 choices here, so click the radio button to the left of your choice and click submit to make sure your response goes through. I'll give everyone a final few moments to make sure all those responses are locked in for CPE credit. Give everyone a final 5, 4, 3, 2, 1. And it looks like about 40% say other, don't know, and not applicable. 45% say no, and then the yes or maybe in the future, about 6 and 9% each. So back to you.
All right, thank you, Danielle, and thanks everybody for your responses. And I guess if there's one thing I've learned at working at companies, public and non-public, hey, these things can come up rather quickly, right? So one day you may not have this on the horizon, and then all of a sudden you do. So hopefully we give you some info you can take with you today. The next one we'll talk about that's really saving a lot of time is automatic matching of discount rates. Really practically speaking, under ASC 842, the discount rate that you need is your incremental borrowing rate. Now, this could bring up a topic that I guess we could talk about for the rest of our time, and we won't. But non-public companies are allowed to use a risk-free rate Public companies don't have that practical expedient. So that could be something to think about from an accounting policy perspective. But really, regardless of what rate you use for lease accounting net present value calculations, you're going to have that available in your software. Kind of the old method was very manual, where people would research the rates. Maybe you would get with your treasury team or your bank or go to a Bloomberg terminal and then type in the rate for each lease, right? Or some companies put a more efficient process in place where they would update their rates periodically, maybe once a month. But still, then they would have to choose those rates from a drop-down or something like that in the software system. Now CoStar has really eliminated all the busy work out of this. Once you upload your rates into CoStar, CoStar will automatically match the correct rate with the lease. And it's based on all different types of criteria, the geography, the currency, lease term, even the type of lease, be it real estate or equipment or different categories that you have. And so again, it really just takes all the busy work and reduces risk in this process. Bryan?
Yeah, I want to comment regarding that risk-free rate, practically expedient, that is available to private companies, but only to private companies. So keep that, bear that in mind, that when you are going through the IPO process or becoming public, you have to adopt all accounting standards as if you were a public company that are applicable to your historical financial statements. So in effect, if you were or are planning to use a risk-free rate and you go public, you'll have to effectively reverse all the prior transactions that relate to your leasing as it relates to the using the risk-free rate and reapply the accounting using the proper incremental borrowing rate. So just to say it is something to keep in mind if for any of those private companies out there that are, you're contemplating going public and you still need to adopt 842, that's definitely a consideration during the adoption process.
Absolutely. And if you find yourself in that situation, not only will the discount rate matching help you going forward, but if you do have to kind of remeasure all your schedules and swap rates, that functionality we talked about earlier with batch remeasurements, where you can remeasure hundreds or thousands of leases at once, that could certainly help out. All right, the next topic we will talk about is separate schedules for book tax differences. And really the book tax difference point here is kind of just an example. There are numerous circumstances where you're going to need a separate schedule. One of them is for a book tax difference. The most common one that I hear about is tenant improvement allowances, commonly called TIA. So under ASC 842, the TIA is kind of just rolled up under the right of use asset, and that's great. You're fully in compliance with ASC 842. From a GAAP financial statement perspective, to have that TIA in your right of use asset number. But then once a year, when your counterpart in the tax department comes around and they ask, hey, how much of your right of use asset that's on your books right now is made up of tenant improvement allowances? And you don't know, right? Because it's all lumped together. Well, in CoStar, we saw that over and over, and the functionality that we have involves splitting the schedules into separate parallel schedules. So the TIA is still part of your right of use asset balance, but it's also easily distinguishable as separate, right? And you can see it every month, the balance that is associated with the TIA. And the balance that is, otherwise the right of use asset that's related to the other components of the lease. So that's not the only example. Again, I won't take a deep dive into each one of these, but purchase accounting adjustments is one, where if you've been through one of those transactions, you've seen these favorable and unfavorable purchase accounting adjustments. There are advantages to tracking those separately from your right of use asset balance. Even in some cease use scenarios, this functionality can be quite useful and really save you a lot of time in having to go back to Excel and kind of recreate schedules. For example, when the tax team or the auditor needs to know something in detail. Bryan?
Yeah, and also it goes back to going from a private to a public company. Accounting for income taxes is another one of those areas that there are differences typically that we see between private and public companies. So not only are there new disclosure requirements being a public company around accounting for income taxes, but there's also the the intra-period or inter-period tax allocation that now needs to take place. So effectively doing a quarterly tax accrual is now required, and having the type of information that the tax team will need about understanding those book tax differences will be required. And this type of functionality that CoStar has is definitely an advantage to being able to provide that and track that kind of information that the tax team and your reporting team will need.
Thanks, Bryan. And the next one we'll talk about is warrantied integrations and automatic approvals. So integrations, I really think in a scenario where you're going public, you're certainly thinking about integrating a vast array of software solutions, right? I mean, you probably are putting in a new ERP system. You're probably implementing some type of financial reporting module, that you're, and it might be separate from the ERP system. I mean, the list can go on and on. One of those solutions that you're going to need is a lease accounting solution, and so you really need those integrations to be seamless. You can't waste time, downloading data out of one system and then kind of moving it around and manipulating in Excel and then re-uploading it into another system. You need the integrations to be automatic. Quite frankly, they need to work. We have companies switching over to CoStar that they say, hey, we implement a solution that claimed to have automatic integrations, but they don't work. So it kind of goes without saying, but hey, sometimes that is the major issue. You need integrations that are warranted, and so CoStar, we now have thousands of integrations with all kinds of different systems. Really every imaginable ERP system we integrate with, and our team is quite experienced in helping you through that process. And so for that reason, we're able to say that we warranty the integrations. Bryan?
Yeah, so you've got typically 45 days to file your quarterly 10Q, and so whatever you can do to help streamline the efficiency of your quarterly close and automating that through integrating between your lease accounting solution like CoStar to your ERP gives you much more time to complete your 10Q, to get your reporting done, to go through that process of meeting the audit committee, the board committees that typically require approvals before you file that 10Q. So again, integrating to take time off of the quarterly close process and really give time back to the reporting teams to be able to produce a good quality 10Q.
Yeah, definitely. All about saving time, and also, kind of along those same lines, we want to talk briefly about advanced in-application help. Because whether you're an accountant or your peers who work in lease administration, you really, I know from personal experience, sometimes you have time to really dive into a question that you have. Maybe talk to a power user at your organization. Maybe get some help online from at CoStar, for example, we have a customer support team that is always happy to help, and then they even bring they bring our team of CPAs and accounting experts who have actually been in the trenches, right? We've worked in month-end close before, and many times we get engaged with customer issues when they have a question. Maybe it's a new user to the system, and they need a little extra training, or any type of customer support activity you can imagine. We're always happy to help. But really, the point of this slide is sometimes you don't want to have to pick up the phone or have to create a ticket. You want to find the answer yourself right now. You're in month-end close, and if you could just understand one thing, you'd be on to your next task. And that's what this really gets into, is that we have made it a point to continually update our in-application help. It's very easy to search and find information when you need it. And so again, we don't recommend printing the the manual out like maybe you used to do and have it as a desktop reference, because we update it almost every day, right? We're constantly trying to make this help better, even to the point that we'll give you guided tours on the screen, if you need a refresher on that. So something that we take a lot of pride in at CoStar. And again, as I started out on this slide, it's all about saving you time. So when you're in the midst of trying to figure something out, if you can have the answer at your fingertips, that's what we want to facilitate. Bryan?
Yeah, again, I think every company is going to go through some kind of turnover happens, right? So people leave, new people hire new people, and I've seen and used the CoStar help. And it is phenomenal, and it's really an advantage having it in application like that. And the videos are excellent, and I can't say enough of the quality of having that at your fingertips versus having to go through a help desk or reach out to some other. So it's definitely an advantage to have that right there at your fingertips.
Thank you. And this is our last main point here. Then we'll go into another polling question. But first, the aspect of fair market value, right? FMV. This is very important to lease accounting calculations because it's part of the decision process of if you classify the lease as a finance lease or an operating lease. This also comes into play for impairment testing, the fair market value of real estate, and also to determine purchase accounting adjustments, whether you have favorable or unfavorable adjustments related to a acquisition. So really quite frequently in lease accounting and in the real estate world, you're having to calculate or determine your fair market value. CoStar has information needed to determine fair market value readily available. In fact, most of the time, if you reached out to a broker and asked for their opinion of the fair market value of a piece of property, that broker would look it up in CoStar and then get back to you, right? And so what we've done with our lease accounting product is we've included that data for the properties that you occupy. We've included that same data that real estate brokers use, and it's right there at your fingertips for everybody that uses the lease administration, lease accounting application. You can look up the same data that they would use, right? So you can find that information and then make policy decisions around how you're going to estimate the fair market value for your real estate. So it can save a ton of time, kind of eliminate the back and forth emails, and certainly if you just need to make a quick assumption about fair market value, it's nice to have that information available. Bryan?
Yeah, I would say this, this is probably one of the most commonly asked questions when we're assisting clients through the adoption of 842, and especially through the implementation of a solution, is, well, what do we do around fair market value? And this kind of functionality is second to none, having this available to you, because in many cases it is information that's hard to come by. And so I can't say enough what an advantage this is in this process.
All right, thank you. And Danielle, I think that's our final polling question on the screen now.
It is indeed. Your next polling question is, do you currently use a software solution or plan to use a software solution for lease accounting? Your choices are yes, a current user, yes, planning to use a software solution, no, planning to use spreadsheets for lease accounting, or other, don't know, not applicable. So click the radio button to the left of your choice here. You have 4 choices, and click the submit button. Before I turn it back over to Matt to wrap things up, I'll make sure everyone gets their responses in. I'll give everyone another final countdown of 5, 4, 3, 2, 1. So give you one more second here. All right. And those are the results. Matt, I'll turn it back over to you.
All right, thank you. And now we're really just wrapping up, and we've got maybe 1 minute for a couple of questions that I see. Bryan and I will briefly address these, and of course we can. Sure. Any others that come in, we can address over email. But one is, our company has purchased lease accounting software, uploaded our leases in the software. However, we have not booked any JEs for 2022 and present audited comparative financials. Can I post one journal entry at year end and be in compliance, or should I open up each month to book the entries, or can I do a true-up entry for a current month and then move forward until the end of the year? What would be the best approach and not cause issues with my auditors? So, I guess I'll weigh in first here. I've seen, this might not help you out as much as you like, but I've actually seen companies do a combination of these things. Some say, hey, it's important enough to us. We want to have records from the very beginning of the year. We're going to basically run in parallel and and go back to the beginning of the year if necessary. Now, I will say, usually we do not see companies opening up prior periods, but they do mock up the schedules in the system and then book the adjusting entries as necessary at year end. But I'd say that's the most common approach I've seen. Not that that's the only answer. I really would say you should talk with your accounting advisors and go ahead and ask your auditors up front, in anything kind of like this. Ask them what they're going to be expecting to see. Bryan, anything else on that?
I just want to add, you can have potential for remeasurements during the period. So, you're going to want to definitely be able to capture all of that. I would probably be more, I wouldn't try to reopen prior periods. Just do the true up, make sure you captured all the activity during the year. At the end of the day, CoStar is your sub-ledger, so all that detail resides within CoStar. But I would recommend, making sure, again, you capture all the activity, record it properly within CoStar, and then book a true-up entry into one open period, if that's the approach you want to take. I would generally try to close books monthly with all the activity, but everyone has a preference. But yes, definitely talk to your accounting advisors.
Okay, so Danielle, I know that that puts us at 1 minute past, so I want to be mindful of everybody's time and say thank you and turn it back over to you, Danielle, to close us out.
Great, thank you, Matt. Thank you both, Matt and Bryan, for a great presentation, and thank you all again for joining us today. Thanks so much.
Have a great